Okay guys, I am back for part 2 of the second video of recording the closing entries. So let's go ahead and get started on reviewing what we last did. So I just wrote down this income summary account here, and then the last video I showed you that we closed the 2,160 to the income summary credit. And then that closes out our sales account. Then we close our expenses to our income summary debit. So we should have income summary credit balance, income summary debit balance. And when you do the math, you always take the bigger side minus the smaller side. And when we do that math and we subtract it, 2,160 minus this number, the balance we get is $677. So we have a credit balance of $677 in our income summary. Well, if we look at our net income on the flip side of the paper, net income, what do we see? 677, same number. No coincidence, because we just took this account minus these accounts, which is what we did right there to get the 677. So it's just copy work. We have to close the sales to the income summary, close the expenses to the income summary. Now we have to close the income summary account. So to do that, we would do the opposite balance and we have to debit it. So income summary gets close to capital because capital is a permanent account. So what we do is we write the 30th, it's April 30th. We write income summary. Because we want it to be the debit of 677. We write 677 here. And this gets closed to capital. So we write Connor Whitney capital. Okay. Credit 677. So now the income summary has a balance of 0, and we just credited our capital account to 677. Normal balance of a capital account is the credit side. So we added our net income to our capital. So capital, I'm just showing you this so you can understand the process. Our original capital there was $7,443. Now we are adding 677 to that, and we should get a total here. So back to this front page to show you how we just brought that capital. We closed out the income summary, brought it over the capital, so our capital shows how much money we actually have. Last closing entry we need to do is close out the drawing account. So first thing we do is sales account, then our expense accounts, then we close income summary to the capital account, and now we close out the drawing account. Remember that the normal balance of a drawing account is a debit, so we need to do a credit. So I'll show you that here. Drawing is any money the owner took out of the company. So we have drawing. Originally, the owner withdrew $1,700. So we show that in the normal balance of that account. And when we close it out, we have to do the opposite, 1,700. So our drawing account will be credited. So what account is it closed to? It's closed to capital. So the first thing I'm going to do, if this is going to be a credit, if this to close it out is going to be a credit, then I'm going to have to debit the capital account. So I am going to write Connor Whitney capital, and I am going to debit that for the amount of the drawing, and then Connor Whitney drawing. Okay, and that is the same amount of the drawing, 1,700. Okay, so those are the closing entries. That is the first step of this. We need to make sure we close it out. It's always in this order, so if you can remember, I will write a brief description of what I just did on this piece of paper. So first thing I do, number 1, close sales to income summary. The second thing is close expenses to income summary. We need this income summary account so we can keep track of things. Then the third, this is just standard practice. If you're, why do we do that? Why do we do that? Standard practice, it's what we do in the accounting field. 3, we close income summary to capital. Then fourth thing we do, close drawing to capital. All of these balances become 0 and they're put into the capital. So, helpful, very helpful if you want to take notes on that. Last thing that we do is post, everyone's favorite thing. You have to post them to the general ledger. This is copy work. We always journal first, then we post to the general ledger, and I need to look back in the textbook to see what journal page they used. So if you look on the page, it says continue on page 8, journalize and post the adjusting entries. So let's say that this is journal page 8 because in the textbook it says to use page 8 of the journal. Let me just double check to make sure. Yeah, so the reason why I'm using page 8 of the journal is because the textbook said continue on page 8. Just gonna put 8 up there. Then we can post properly. So I'm gonna leave this up here, see if I can do both at the same time for you. So, first thing we do is close out or post these rows, these columns. So let's start with sales and work our way through. Sales account, we have to find the sales account in our general ledger, and it's right here on the bottom of page 162. So there's already a balance there, and we need to write 30th, the date. Post reference is page 8 of our journal. Now we look, is this a debit or a credit? It's a debit. The sales is a debit, 2,160. So I put a debit balance, 2,160. These are already there from previous posting. So if I debit this 2,160, what do I get? 0, a 0 running balance. Okay, good. We don't want to show sales anymore. We want to close it out for this fiscal period. So then we go ahead and write our post reference number, which is the 410. 410. So we can find it later. 410. Part of standard practice. Okay, let's keep moving.